Kenneth Andrade, the founder and CEO at Old Bridge Capital Management, is joining us now to talk about the markets and how he's feeling about the big push that we've seen lately. Kenneth, hi, good morning. Thanks for joining in. It's been such a spectacular market, right? I mean, new highs and earnings have been picking up substantially. But what from here? Do you think this pace of growth is something that the market can sustain? And how are you approaching it now?
Okay. So we've come into a place that investors just had to remain invested, and you would have gotten a lot of capital gains on your books. Big question that Sonia you asked was what from here? Look, if you look at market cap to GDP, we are trending towards the higher end of the entire buffer zone, which is 1.1 time market cap to GDP. So we've been here before, but the follow-up of that hasn't been extremely good in terms of how markets have evolved over the next couple of years. So valuations are fair, but some part of the market has gotten reasonably expensive. So you've got to tread with a little bit of, I wouldn't say caution, but a large part of the valuation is already on the table. Incrementally, you'll have to be very narrow in terms of how you want to participate with the marketplace. And that cuts down to how financials have also played out. Now, when I talk about financials, I say corporate financials. It's difficult to find a company that makes a loss. Of course, there's a couple of them that are there, but in the NSE 500, about 15 companies make operating losses. Okay, and that also as a percentage is extremely low to where we've been historically. So we're going through a period, or rather India is going through a period where you're seeing the best of everything that is on the table. Margins are there at all-time high. Companies are doing extremely well in terms of cash flow. There is no debt on balance sheet, and valuations are representing all of it. Okay. So that's where we are. Incrementally, I'm not too sure that you'll maintain the pace of growth that the market has displayed till now, and you'll have to be a lot more selective in how you participate in the marketplace.
Kenneth, morning. Have you booked profits in any of your holding stocks? And if yes, could you give us an indication where you believe things have gotten a bit overheated?
So from a plain process point of view, just look at businesses that are all-time high in terms of margins, okay, and are trading significantly expensive to where they have historically been. I think that's a space that we are incrementally taking money off the table, right? So we haven't churned our portfolio for like the last 3 years, and a lot of those businesses have done reasonably well to extremely well. But anything that is trending over that 30-time multiple and also is gotten all-time high in terms of operating margins, I think we are a little circumspect of those businesses, and we are taking money off the table in some of that. But the challenge here is, and while that's one part of the answer, but the challenge here is the reinvestment risk that we are facing, because we will end up chasing something else. So we're not in a hurry to take money off the table. We'll just probably ride through this entire cycle into the next couple of years. Our portfolio churn should be about maximum about 15 to 20% this year. I don't think it's going to be incrementally more.
All right. Hi, good morning, Kenneth. Thanks so much for joining in. Kenneth, I wanted to ask you about how you position on the IT space, because that's going to be the big theme that will play out, particularly for the next week or a couple of weeks at least. Are you looking to buy into it? Is it a contra trade for you? Or do you believe plenty of hurdles ahead, so you'd rather stay away and you'd rather be negative?
So the best way to capture, to build a portfolio is actually to try and capture it on the downside. Because what happens is you've got all the negative news. All of that is also reflecting in valuations. And because of the combination of two, okay, your downsides are limited. Now, look, most of these companies are extremely mature. They're facing a global economy, and all the negativism that is sitting out there in the global economy is representing in where the valuations trade. Now, none of these companies are doing lower business in terms of volumes, right? So always looking at over the next 6, 8, probably the next 1 year is how and where do we participate in this segment of the marketplace. Now, this is very representative of how investments in how the process works. Probably, if I step back about a year or 2 years back, where we articulated our portfolio is articulated the same on pharmaceuticals, and now you're seeing all the pricing power coming back, or some part of the pricing power coming back. Right? IT is going through the same format right now, and remember, this is a global business. This is not an India-facing business. Only India part of it is lower employee cost compared to the West. So I think that's essentially the positioning that we would want to take going into the remainder part of this year.
So you would be a contra buyer into IT?
It's not contra, really. You're just buying into bad news.
Buying into bad news. Got it. No, I meant contra because most of the street is a little bit skeptical on it, and you are looking at it a little positively. So you're looking to buy into the bad news. Got that, Kenneth.
Okay, well, that's always a good thing, right? I mean, buying into bad news and perhaps taking advantage of the fear in the market and going out there and being a bit greedy. That's always worked in the past. By the way, I wanted to mention that the Nifty Auto Index has once again hit a record high. And so many auto stocks are at fresh record highs this morning, whether it's Tata Motors, Bajaj Auto and the whole lot. Of course, it's been a norm for a while, but these are fresh records. And something like a Bajaj Auto is up about 1.5%. But Kenneth, I wanted your thoughts on what's happening with Reliance and the Jio Financial demerger. Now we have the date out as well. You may not want to comment on the individual stock, but you know what's going to happen with Jio Financial Services is they are going to disrupt a lot of these spaces, right? Whether it's lending, wealth management, insurance, the payment finance, banking space as well. Do you think for companies like Bajaj Finance, now that a supposedly large competitor is going to come in, this could perhaps derail growth plans there? And what about the industry as a whole? How are you looking at it?
I'm not too sure it will derail any other participant because the marketplace itself is significantly large. And if you go on to address the bottom end of the population, I think that's a very broad the bottom pyramid of the population. That's a very broad and large category of borrowers to address. So no one's going to run out of the market. Now, it all is now left to execution. Now you've seen Bajaj Finance execute, or you've seen one company actually execute. You've got a number of other companies in the NBFC space who are also executing. But probably in terms of scale, in terms of growth, there's one company that leads the pack. The challenge in all of this is to find another participant that will grow. And if I had to relate it to anything else in the past and in history, given the fact that the marketplace is so large, okay, one private sector bank got established, the second private sector bank also got established, and then there was number 3 also that was there, and the number of companies that came through in private sector banking only expanded. I think the same thing is happening in every other industry that you will see, including NBFCs or financial services. So one company leads the pack, the second company will establish itself. I think over the next couple of years, you will see one dominate the other, or probably both of them split the market between themselves. So it's all about execution. It's too premature to talk about who's going to execute better and is someone going to lose market share, but I think the opportunity is reasonably large and scalable for everyone who's out there.
Kenneth, PSU banks have started seeing a lot of buying interest with names like, Bank of Baroda. The growth rates are also benefiting on account of the low base. But would you be positive on PSU banks at these levels?
So, Rima, if I just step back again, if you want a valuation trade, you'll always find one in the marketplace. Okay, and some part of the public sector businesses fall in that place. Some part of the IT businesses fall in that place. Are they the best businesses around? I think it's left to individual investors to decipher that as to how to play this entire category. Sure, there is a bank or two out there in the public sector space that offers a lot of value with reasonably good execution. But will they form a core part of our portfolio? I think we sidestep this entire space completely, and I don't think we're going to go down that path again. So it offers value. Some execution is great out there, and it will obviously make reasonable amount of money for over the next couple of years. But always remember, this is this sector of the economy, anything which is government-led or which is public sector enterprise, right, is always reflects the state of the economy. if the government's balance sheet is cleaned up, or if the government's balance sheet does well, public sector enterprises do well. Okay, and it works the reverse way also. So you're essentially playing a structure of improving financials from on the government in the government, and the offshoot is these companies tend to do reasonably well in that format.
All right, Kenneth, final question before we let you go. If your markets are moving in your favor, you like to celebrate and open maybe a bottle of champagne and celebrate it. And if it's not going in your favor, maybe you drown your sorrows as well. I think you all had some exposure to the alcohol space, right? Global Spirits, if I'm not mistaken, and a couple of other names as well. How are you all positioned? Radico as well, if I remember correctly. How are you all positioned on that space? A lot of the good news is in, or do you continue to hold on to those positions?
So again, Nigel, it's been a phenomenal year or two for this industry. I think we've seen volume that we've never seen before again. And if I'm not mistaken, from all the statistics that have come out, India is the largest consumer of alcohol in the world. Right? I don't know if that's a good thing or a bad thing to talk about. But if you're at this position at this point in time, I think the marketplace is an opportunity to gear up in terms of pricing, which is what the market is all talking about, premiumization. So you've got the consumer, you've got to make sure that they pay more for the same product. And if these companies execute well, I think the profitability could be very staggering over the next decade.
Okay, and you all have exposure in both these two names, Global Spirits as well as Radico? Just to confirm.
Yes, we're both.
Okay.
All right, Kenneth, you heard Nigel say it, right? Whether you want to drown your sorrows or you want to celebrate the markets, the antidote is the same. All right.
Good or bad thing, we don't know, but it's reflecting well in the stock prices.
It's reflecting well. Okay, people are celebrating. Thanks a lot, Kenneth, for joining in the market.